Since the huge swings that we saw in 2020, when the market was being sold off and rallying back significantly, the PSEI has since been stuck in a range from a low of 5,700 to a high of 7,500. The range has even been tighter for the last 2 years, from 6,000 to 7,000. So clearly, there hasn't been any sustainable move in the market for quite some time, and this has caused interest and liquidity to decline. What's interesting, though, is that in the last 4 weeks, the PSEI has performed quite well, rallying by 10% from the low that was set late last month. This has been driven by optimism about the seemingly inevitable rate cuts. So is this finally the catalyst that we've all been waiting for a sustainable rally? Or are there still concerns or risks that could cause even more volatility in the coming months? Most importantly, what are the opportunities that we see given our view on the market today? These are the questions that we hope to shed some light on over the next hour. But before that, I'd like to first share the results of our latest investor sentiment survey. Of course, as you may know, we do this regularly to get a feel of how the market sentiment is trending. Okay? So let me share with you the first question. We asked you guys, at what levels do you think the PSEI will be in 6 months? And as you can see in this slide, most of you, at the latest one is at the bottom. You can see most, 57%, is still expecting more returns in the coming months. Noticeably, this is slightly lower than the level that we saw in January 2024 of 59%. But at the same time, we also see fewer pessimistic clients, right? From 11% to 6%. And again, I guess similar to what I mentioned just a while ago, more people are now neutral, from 32 to 36%. So again, reflective of the long sideways trend that we see in the market today. Okay, so for the next question, we ask, in terms of the risk, what is the greatest risk in the market going into the second half of 2024? And interestingly enough, more than a third of you answered the escalation of geopolitical tension. And I think this refers to all the issues with the West Philippine Sea. And yeah, this is something that I'd probably like to get back to later on in the discussion. Next question. We also ask you the sectors that you are bullish or bearish on. And it seems like the most bullish sectors would be your power and your REITs. Okay. Again, I'd like to go back to this slide later on. Okay. For this one, it's interesting that there seems to be more people, so 28%, who would like to increase their positions, given their positive view of the market, than people who are concerned about their exposure in the market, given their negative view. So 28 versus 22%. So that's the interesting part for me. Next one, please. And then lastly, we ask you about your plans in the next 3 to 6 months. Do you plan to increase or decrease your allocation in these products? And most of you are still looking to increase, particularly for the local stocks, right? And income-paying investments, right? So let's see if this is in tune with what we're going to be hearing from our expert today.